Welcome to Regulatory Ramblings. Our podcast today is brought to you by the University of Hong Kong's RegTech Lab, the HKU Standard Chartered Foundation FinTech Academy, the Asia Global Institute, and the HKU edX Professional Certificate in FinTech, with support from the university's Faculty of Law. A recent op-ed piece published by Coindesk, authored by Linda Jeng, was entitled "The Biggest Bank Heist in History is Coming." The article starts off by pointing out that American regulators are permitting banks to tokenize financial assets such as bank deposits, U.S. treasuries, and corporate debt. Yet, they want to keep institutions using permission networks rather than the decentralized blockchains that keep assets safe from hackers. In February, the Office of the Comptroller of the Currency, an organ of the U.S. Treasury Department, the head of that office announced plans for new rules on operational resilience for large banks with, quote, critical operations, including third-party service providers, end quote. Yet, what wasn't discussed, however, was that such rules would, quote, treat the use of permission networks by the big banks to tokenize real-world assets and liabilities, an omission that neglects critical new vulnerabilities to the global financial system. The article ends by pointing out that encouraging the use of permission networks over permissionless blockchains will inevitably lead to cybersecurity attacks, and we're fortunate to have the author of the article, Linda Jeng, with us today. Linda is a visionary leader and strategist in digital economy matters with over 20 years of experience in fintech, policy, and regulation. She's the founder and CEO of Digital Self Labs, a Web3 advisory firm. Digital Self Labs is a cross-disciplinary firm combining blockchain software expertise with policy and regulatory strategy. It's there that Linda helps clients design and implement innovative solutions to empower individuals and enable interoperability, transparency, and efficiency in the financial and digital sectors. She's also a renowned scholar and educator with affiliations with the Georgetown University Law Center, Duke University Law School, and the Bank for International Settlements. She conducts cutting-edge research and teaches courses on open banking, digital identity, decentralized finance, or DeFi, as it's more colloquially known, and has authored several publications and contributed to influential books on those topics. She's a frequent speaker and commentator in the media and a Forbes contributor. Linda earned her JD from Columbia Law School and holds a master's degree in EU and international law from Université Toulouse Capitale. She speaks Mandarin, Chinese, French, and basic German. And with that, I'll turn it over to Linda. Thank you so much for joining us.
Thank you, AJ. I'm honored to be invited.
Tell us a little bit about yourself. Where you're from, where'd you grow up, and how did you end up in the legal profession? I know we all have our own different paths to law school, but we'd be keen to hear your story.
I was a bit of a rebel. This is not a good reason to become a lawyer, but I was the black sheep in the family of engineer.
Oh, okay.
and my father thinks, or at least thought quite poorly of lawyers, and thought they were a plague upon society. And I was a little rebel, and I always did what he didn't want me to do, and so that's how I ended up being a lawyer. But the real truth is, I became a lawyer because I really wanted to understand the system and understand how to empower myself and those of my community. And so, to better explain that, I was born in Taiwan, and my family moved to the U.S. When I was a young child, and I grew up in the American South, where there were very few Asians, and so I was felt very aware of being different and apart. And so I really felt that law was a framework in which I could figure out how I could best empower myself and also to help others. And I ended up going to Columbia Law, and in my class, I was the only one who went directly into public service. I very much wanted to work in government and to contribute in the way I wanted to contribute and add value to society. And it all sounds very laudable, et cetera, but it was just something that really drove me. And that's how I ended up working at various financial regulatory agencies. I began my career at the OCC, and then I ended up working at a number of other Washington agencies, including the SEC when the global financial crisis occurred. So I headed to the U.S. Senate to work on the Dodd-Frank Act as part of the efforts to reform our regulatory framework. And after that, I went to the U.S. Treasury, worked on the international implementation of the global financial crisis reforms, and ended up at the Fed, where I worked on a number of also too big to fail projects, and was sent to the Bank for International Settlements to work at the Financial Stability Board, where we put out a standard for total loss absorbing capacity. So as you could tell, they were like very traditional financial regulator, and I only ended up in financial technology because the Basel Committee had asked me to chair a working group on open banking, and that was my gateway into FinTech. And I fell in love with the topic and decided to leave the Fed to work on a book and teach at Georgetown. And that's when I was approached by a DeFi startup to help them develop product. And that was about 4 or 5 years ago. And I've been in the blockchain space ever since.
It's a very interesting path. I mean, and I'm struck by your dad's attitude towards the legal profession, because let's be honest, for the longest time, certainly in North America, the law was not a path that most Asians went down. Because I mean, and I'm generalizing, but from what I've seen in the Indian and the Chinese, and certainly in the Iranian communities, it's about math and it's about money, and they want their kids to go into business school or medicine or real estate or investment banking, or go to work for a hedge fund. But that seems to be, for the longest time, that seems to be the thinking. And that then as they integrated, as they assimilated into American society, they started to understand, no, lawyers have power. Just look at Congress. Just look at the composition of Congress. That the law, has a prestige, certainly in the U.S., and a lore that shouldn't be dismissed. But yeah, for the longest time, it was a very non-Asian field, but certainly going into public service, I've known more than a few Asian parents in the U.S. that have eschewed their kids from doing that. The thinking is, I didn't spend that money for you to go to a top 14, top 20 law school for you to just cool your heels as a bureaucrat until you figure out your next move. But I think, frankly, that's one of the best things that they can do, because working for the SEC or the CFTC or the Fed gives you experience that's going to be well sought after once you enter the private sector. But there's that critique about the revolving door between government and the private sector. It has pros and cons.
Well, it's funny now. I think my parents are quite proud of what I've done, and they appreciate how interesting my career path has been so far. It's been one of risk taking, which is kind of funny to hear because you're like, oh, one doesn't think of going to government as a risk-taking exercise, but it actually is. There's a lot of very important work that government takes on that isn't fully appreciated, and the people who work in government, I greatly admire and appreciate, because a lot of people say, oh, public sector doesn't work as hard as private sector, but now I've worked out, both. And I can say I work probably just as hard, if not harder, in government, especially during crisis times, than I do now, even in private sector. And so I actually encourage everyone, especially your law students, to work in different sectors and be cross-disciplinary, and to be open to learning about different topics and help think about how to connect the dots.
I'm still intrigued by. I mean, you were in the catbird seat. I mean, right after the global financial crisis. I mean, in terms of working on Dodd-Frank and all the other committees you were on. Describe that time to me, because I mean, we all experienced the tension and the perilousness and the not knowing what was going to come next in different ways. But I mean, describe that time to us. I mean, the uncertainty, the trepidation. I mean, you were crafting rules that you knew there was going to be strong pushback from the industry, and certainly, indeed, Dodd-Frank did face judicial challenge. What are your reflections like on that?
So I had moved to Washington, D.C. only a few months before the crisis from France. I had been working at a French bank, and I was had studied at a law school in France at University of Toulouse, and I accepted a job at the SEC, which I was very excited about, and moved to Washington only a few months before the crisis began. And when it began, I still remember this, that very day that Lehman was crashing. The halls of the SEC were quiet. It was like I could hear crickets. Everyone was so scared that there was almost no noise, and I felt like, how can I help to the best extent possible, in my own personal way? And that's when I made the decision that I had to head to Congress and help with what I knew was going to be happening, which was, we were going to have to address what caused the crisis, and I wanted to, do my bit. But it's still eerie to think about that time, because I really sensed fear. There was just fear throughout the building, and I was fortunate enough to end up on the Hill at the U.S. Senate, and was able to participate in the drafting and passage of the Dodd-Frank Act. And now I could tell you where all the skeletons are buried in the Act. It is definitely quite a sausage-making machine to put out law, there are so many different stakeholders with many different interests and agendas, and getting everyone to the table and to agree to a piece of legislation was a huge undertaking. It took essentially 2 years, which is a record time, I think, for a legislation as large as the Dodd-Frank Act. And it also showed the vision of the officials at U.S. Treasury who pushed that legislation as well politically from the executive branch, and how it worked with the legislative branch, Congress. And also keeping in mind the whole time, like, is it consistent with the international standards that are being developed with other countries at the international standard setting level? And most of those bodies are based in Basel, Switzerland at the Bank for International Settlements. So it was getting to watch 3D chess and participating, as a little pawn in this 3D chess game.
My own reflections on that. Obviously the telltale signs were there in 2007. I left the U.S. in 2006. But when Lehman happened, when I reflect on September of 2008, it was early in my career. Yeah, there was just so much uncertainty about it, and then President Obama came in. Dodd-Frank was being touted as the solution, and I guess what I'm wondering is, given the way Dodd-Frank was gutted during the Trump administration, was it disheartening for you? Given the hard work you put into it, and to see how it was steadily being dismembered.
So if you look at the act, the main contours of the framework include a really important component for financial stability, and incorporating financial stability into the regulatory regime. And you can see how it's been formally adopted through the creation of the Financial Stability Oversight Council, with the Treasury Secretary as the chair, and a number of new powers that were given to the Fed in terms of being able to oversee systemically important institutions, and also powers to increase surcharges for global systemically important banks. And so those parts are quite strong, and that was probably the most important aspect of the Dodd-Frank Act. So I don't see that part having been dismantled at all. And then in addition, the Consumer Financial Protection Bureau was created and given numerous powers to enforce consumer protection. It has taken them a bit longer to put out a number of rules, especially the one on open banking. So I think you probably to point out to me specifically which ones you think have been dismantled in the Dodd-Frank Act.
Let me get back to that, because it's been, well, the Trump administration was 4 years ago. As I recall, the industry fought it tooth and nail, and indeed others had said, okay, there needs to be reform, but others said that maybe Glass-Steagall needed to be reenacted What are your thoughts on that? I mean, because I think the last vestiges of Glass-Steagall were overturned in the 90s with travelers insurance and whatnot. But I mean, is there any way we can go back to an age when investment banks are in their corner, insurance has theirs, and banks have theirs, or is that just not practical in an age when there's so much cross-selling and the boundaries between different financial products and services have to a great extent evaporated? Could Glass-Steagall be reenacted?
There were some calls for that, but it didn't get much traction. And the idea of separating banks for commerce is still a very important part of the U.S. regulatory regime. But the focus wasn't on rolling back the structural components of how a financial group can be comprised, but more about holding more reserves. So that idea just didn't get much traction, and so I don't think that Glass-Steagall, a return of Glass-Steagall is in the future, and no one really talks about it anymore. But I think a bigger and more interesting issue is the role big techs could play in the financial system, and you can see when Facebook introduced the concept of a global currency called Libra, that really forced governments around the world to think about the role of money and potential loss of monetary control, and the sudden interest in building central bank digital currencies.
The debate so far has been CBDCs, or this is how I see it presented, CBDCs or stablecoins. We have some scholars, including one at the University of Hong Kong, a doctoral candidate here, who's co-authored a paper that says that CBDCs can exist quite comfortably alongside stablecoins. What are your thoughts on that?
Yeah, it's really about how both are designed, and if the CBDC were designed as a wholesale CBDC, I could see that serving as the base layer, the M0 of the monetary framework, and then privately issued stablecoins could be the layer above, which would be M1. So I see that as almost a digital representation of what we currently have in fractionalized reserve banking, where already central bank money is the M0, and then commercial bank money is the M1. Now, if the CBDC were a retail CBDC, I think that would really change the monetary system quite a bit and introduce the central bank as actually a competitor to commercial banking. And then that would raise questions around what kind of fractionalized reserve banking system will we have then if the central bank were a competing bank with commercial banks.
Originally, the fear was that banks and perhaps even central banks would be disintermediated in the process. But I as time goes by, I see them more as partners utilizing the same technology. What are your thoughts? I mean, were those fears overblown, do you think, in retrospect?
Well, I think the biggest fear or concern is really around privacy.
Yeah.
And that's the biggest issue. In that issue will have to be addressed in the design of the central bank digital currency, and as well as the stable coins. So the anticipation is that money is changing. Literally, the nature of money is changing as we speak. And so that really makes for an exciting time to be working in financial technology. And how do I anticipate money changing? I anticipate that money will become programmable. And in order for money to be programmable, you're going to have to use data, and in particular, your private data. And even in programming money, you will also be generating private data. And so I think it depends on the social values of the country. And some countries, the central bank is not interested in collecting personal data, whether it's because of liability reasons, because it is a huge responsibility, or for operational reasons. Collecting that much personal data is also a challenging task, and I can certainly say, as someone who had worked at the Fed is not at all interested in collecting personal data. So in that case, a central bank digital currency by a central bank that does not want access to personal data, chances are that the CBDC will not be programmable money, but privately issued stablecoins could be programmable money. And then the interaction with personal data would be at the stablecoin level. Now, if the CBDC were designed to be programmable and therefore collect personal data, then the citizens of that country will have to be comfortable with central bank collecting data about them and their financial behavior.
Okay. Let's turn to your piece and why you believe the biggest bank heist in history is coming. There are two passages I wanted to share with our audience. Quote, you write, by contrast, the most successful crypto hacks usually involve centralized protocols where hackers only need to hack the admin keys of only one or a few actors to gain control and steal digital assets. Similarly, permission networks are controlled by only a few parties, so they can be more easily hacked than blockchains maintained by thousands of validators. The concentration of attack vectors in the big banks that control these permission networks, or the central banks that control non-blockchain ledgers, is like sticking targets on their backs. Quote, encouraging the use of permission networks over permissionless blockchains will inevitably lead to cybersecurity attacks on a scale previously unknown in the financial system. Moves to tokenize trillions of dollars worth of real-world assets and liabilities. The biggest bank heist in history is in the making. That's pretty dire, right? I mean, that presumes multiple layers of security, multiple fail-safes are breached for the scenario you're describing to happen.
Yeah, so with blockchains, a breach occurs with essentially through a 51% attack. And that just means you have to gain control of over 51% of 51% or more of the validators in a blockchain. And so if you have thousands of validators, and that means you have to get control over 51% of thousands of validators, but in order to get control of a permissionless open blockchain. But with permission networks, often there are only a few validators, and sometimes as few as 3 to 5, and you only need to gain control of two validators, two administrative keys, if there were only, say, 3 administrative keys, or if there were 7 administrative keys, as in the case of like the Ronin Bridge, you just have to get control of 4 or 5 administrative keys to gain control of that network. And so the operational resilience of a permission network is just less than a truly decentralized blockchain. So I don't think everything has to be on a decentralized blockchain, but I certainly do think real world assets that are being tokenized should be on the most resilient system possible.
I mean, when I first read it, what you wrote, I was like, okay, so this feels more like an end of the world scenario, kind of like 9/11, where multiple things go wrong on the same day, and that it's in some sense a confluence of factors that just happen to align a particular way that causes everything to go to hell. But I mean, what you're arguing is that it's the circumstances need not be that dire, that they just need to hack a couple of people, a couple of parties, in order to be able to pull off such a heist.
Yeah, it just depends on how the permission network is designed. But because it's permission, there are just fewer parties in control. And that means that's just fewer parties that you need to hack to gain control of the permission network. And practitioners in my space, we all know that permission networks are more brittle and vulnerable than permissionless blockchains. And so I do find it worrying that regulators are not only encouraging, but almost requiring banks to use only permission networks. And this is going to create problems down the road.
Pretty soon we're going to be coming up on the 20th anniversary of a blockchain, of Satoshi Nakamoto's paper, and the whole idea of virtual assets is not new. In some ways, even predated that landmark paper and the concept of blockchain. But when you think about how you transitioned into this field, going from law, and you still deal with matters of legal and regulatory policy in this space, but not being a techie and dealing with the tech issues and their intersection with law, was that overwhelming? Was that daunting? Did that take you out of your comfort zone, or did you go into it wholeheartedly saying, this is a new upcoming field and I'm excited by it and I want to learn as much as I can? And did you like go into it head first? Did you lean in? Did you dive in?
I think it was at least my entry into the blockchain space was by happenstance.
Right.
When the startup approached me, I was happily doing research on open banking and open data, and so I didn't understand why they want me to join them, because I didn't know anything about blockchain or crypto or DeFi. And they said, that's fine. What we need is your banking, securities, and payments law expertise to help us design our product. And so that's how I ended up joining. And next thing I knew, I was working directly with software engineers and product team, and it was fantastic. It was really fun to be able to work with people with different skill sets and to bring my perspective and my views into the design of the product. And it, in some ways, it was definitely new in terms of I hadn't worked with software engineers before, but I had always been very comfortable working with PhD economists. while I was at the Fed and at the BIS. So in some ways, it's it wasn't new for me to work with in a cross-disciplinary way. And I even ended up leading an engineering team, which as a someone who's trained to be a lawyer, this was a very new experience to see, how engineering teams work. And that was, I think, a really fantastic experience to see how that profession operates and seeing the parallels between software engineers and lawyers. And I really do see a lot of parallels. Software engineers have to be very careful and logical in how they code. And every piece of code counts in building that program. And similarly, with lawyers, every word counts in, say, the drafting of contractual legal agreements. And if you look at a contract, it is like programming. Every word matters and must come together to represent the agreement between two parties.
I mean, we were taught that when we were writing our memos and our briefs in law school, that it's like you've got to use the same words all throughout. You can't, use the colloquial vernacular definitions of words that in a legal context, they're terms of art. They mean something specific. And it's like, if you change the word in one sentence, it's like changing the terms in an equation. Therefore, you can't do it. So you definitely feel that many of the logical thought processes that go into writing code are the same as legal draftsmanship?
You have to approach both very logically.
But I guess what I'm wondering is, was it ever intimidating being around all these techies? Did you ever say to yourself, this is over my head?
No, if anything, I think it's really important for lawyers to have a seat at the product design table and contribute what must be considered when building a product. And so it's not enough just to have the tech. You have to make sure that there is the correct legal and policy wrapper. Otherwise, the product will not survive. So part of what I do today is really helping startups think through, what are the risks that we must address and embed in the product. And that can range from financial risk, operational risk, to regulatory and policy risks. But all of that needs to be considered and built into the product.
What do you see as the biggest regulatory policy challenges in this space moving forward?
I think the very biggest one is the lack of understanding by many regulators around the benefits of decentralization. I don't think everything has to be on a decentralized blockchain, but some things work really well on decentralized blockchains, and decentralization provides very interesting, novel benefits and attributes that we haven't been able to enjoy in at least the most recent phase of the development of the internet. And these benefits are transparency, immutability, and also resiliency. This is very difficult for regulators, and as someone who is a former regulator, to be comfortable with essentially a new world order whereby there is really no throat to choke. And this is going to require a huge cultural adjustment.
Let's pick up on that. The idea of a new world order. It is a brave new world, and Web3 is going to be a part of that. What conceptually, if you had to explain it to a 5-year-old, a layperson, little to no degree of tech savviness, what's the best way for them to envision Web3 and what will it mean to them? Why does Web3 matter?
Self-empowerment, I think, is the most important part for the individual user. So your data doesn't have to be controlled and held by a third-party tech company. Is actually your data that you can control. And that is what is so powerful about decentralizing technologies, is that you don't have to go through an intermediary anymore. Of course, there's always going to be an option to go through an intermediary because sometimes that's just simply easier to go through one. But there would now be optionality for the user. And this is really quite powerful.
Going back to the issue of Web3, and sometimes it's said people are talking right past each other, because in contemporary times it's been said that Web3 and Web 3.0 are not necessarily the same thing. Is this a distinction without merit, or does it matter? Is it? Some say don't get hung up on the nomenclature. Others are like, no, they're very different and they allude to different things. What's your take?
I don't think it matters. We don't even know what the internet is going to look like because we're actually building the ecosystem right now. And that's why it's really important to get involved, to care, because the way the digital economy is evolving right now depends on who is participating and who will have market power and end up being market dominant. And so some of the most powerful players today are your traditional big techs, and they have huge advantages in this space. And so, if the aim is to disintermediate some of these big players, it's definitely not in their interest for that to happen. And so how the digital economy will look is still up in the air because we're building it at this very moment. So it really doesn't matter the nomenclature. It's what we're striving to construct for the future. And I think it's really important that the digital future includes very strong personal data rights that allow us as individuals to be able to control our data and therefore to be able to control our digital assets, including our identity assets.
And I mean, the focus for the longest time has been on the financial sector, but others say Web3 has social implications as well for, data privacy and personal security and indeed personal dignity to the extent people choose to interact in Web. I mean, personally, my own take is sometimes I feel the debate is too ethereal. It's too in the ether. It's too above the cognition or concern of the average person, because their attitude is, okay, whatever the state of the web in any given era, I'll use it depending on the technology at my disposal, because I'm not even sure if the average person is cognizant of when we went from Web 1.0 to 2.0.
I think that when I flip on a light switch, I don't actually think about, how did the electricity travel from the power generator through power lines to reach this light bulb. I just expect if I flip on the switch, the light will just come on and it will be safe and it will not explode, and that's how I expect most users to use technologies. They don't have to actually think about what all the machinations are that's powering the service and product. And that's really how it should be. But we are all very aware that we've lost a lot of control over our personal data and our personal rights in the digital economy. And now the technologies are reaching a point where we can actually be able to take some of that power back. And so you're seeing that already with a number of developers out there building decentralized gaming, decentralized social media. And decentralized is frankly just I almost feel like it's a misnomer. Like what I think would be a better way of describing is, self-managed, social media. So, for example, if you want to move from Twitter to another social network, you can take your Twitter handle with you along with your followers. And you're seeing this now with the potential TikTok ban by Congress here in the US. And I think a lot of TikTok influencers are suddenly feeling like they're going to be disempowered. They're just going to have their accounts shut down. Imagine a world when you could just be able to take your TikTok account and your followers with you to another network. Like that is very real, and these are actually products and services that are being built this very minute, and so I think that this is not really a topic in the ether that's in the ether, but one that's affecting everyday people now.
Yeah, I mean, I think the more they come to understand how the functionalities are germane to them, that make a practical difference to them on a daily basis, the more attention they'll pay to it. We've covered a fair amount of ground so far. In the time we've got left, are there any closing thoughts you have? I mean, anything you feel we didn't cover? Any impressions you'd like to leave our audience with?
Well, I think it's really important to think about how these emerging technologies are disrupting not only business models and current economic structure, but very importantly also our current legal regimes and regulatory frameworks, all of which will need to be updated to address this new world order that's emerging. And so this is actually a very exciting time for students to be studying law and entering the law profession.
Well, I mean, you said it well. I mean, because we are affiliated with a law school. I mean, I guess what I'm wondering is, once upon a time, it was a matter of you learn the rules, you learn the procedure, You get your bar license, your practice certificate, you do an apprenticeship, depending on the system, you do a pupillage, and then you're off to the races. You're practicing law. The interface of law with technology, what will it mean to new graduates that the technology should not be viewed as something that's going to undermine them or reduce their professional prospects, but if we're being hopeful that it's a tool that'll make them more effective lawyers. But given the prognostications for AI, if a machine can do that basic, issue, rule analysis, conclusion type legal analysis, what's the role of the lawyer?
Well, I tell my law students that I am fine with them using ChatGPT as a starting point for, drafting papers, but I will be able to tell that they have not put any original thought or research into it when I get it. So I'm fine with them using AI tools, but you still have to add that original thinking and analysis in the paper. And so, if anything, I feel like AI tools can be very helpful for lawyers, but there's still a lot of things that that generative AI still gets wrong, and it's quite apparent when one reads these papers. And so sometimes I joke now, this looks like it's been AI written. So I think it's just going to change how we do research and writing, just like when Google came along and really changed how we do research today. I still remember in high school and parts of college where we didn't have Google, right? And you had to go to the library and look up books in the card catalog and find subject matter using the Dewey Decimal System. So I think this is just all part of the evolution of research tools that are available, but still have to apply that very human layer of original thought and analysis.
I agree. I mean, certainly when it comes to the use of generative AI, the key is writing good prompts, tailoring your question in as pointed a way as possible. But again, to be able to pose those pointed questions to get exactly what you're looking for requires you to know enough about the subject matter. I mean, I'm sure you've seen that with students. There are those that know it and they can answer a question posed succinctly, brevity being a virtue. And there are those that take the shotgun approach in terms of their answers. And yeah, I mean, I think if you know the subject matter, then you can pose pointed questions and you can get the most out of AI.
Yes, and even having good prompts is still not sufficient. You still have to go through the response that's spouted back at you and revise accordingly. And so it's not just about having the right prompts. It's actually, being able to use the material that's sent back in a smart way. So a lot of times things that are sent back, it's just perhaps a starting point for drafting, but it should not be the final draft.
Absolutely, yeah, I agree. Absolutely not. I mean, if I were to analogize to taking an open or a closed book test, I mean, even when it came to an open book, open note test, you still had to study, right? so that you knew where to find what you needed on the day of the exam. And if you were smart, you highlighted and you tabbed and you color coded accordingly, because you don't want to go into an exam cold. Because if you haven't looked at the material, the fact that you have access to an entire universe of knowledge and answers won't do you much good. You know, I'm sure you've seen that as an educator, that those that come prepared, it doesn't matter if it's open book or closed book. And I think it's the same with AI. Those that aren't prepared aren't really going to get the most out of AI.
Yeah, absolutely.
Well, Linda, thank you so much for your time.
Oh, thank you for inviting me.
Much obliged. Let's do it again. And to our listeners, thank you again. Until next time.